Hey the traders and market watchers, welcome back to Behind the Charts. In today's video, we're going to be diving into why the dollar has given up nearly half of its recent gains and what this means for the Euro USD as well as what it means for gold. So we're going to be discussing the weak jobs data that came out, also the new trade tariffs that has been shaking up global markets, and also what to watch out for in the week ahead. This includes the Fed rate cut expectations, and also key economic reports. So, with all that being said, guys, if you are trading currencies or metals or anything for that matter, I'd encourage you to consider subscribing to the channel just so that you can stay updated with our weekly market outlooks and market insight videos. So, yeah, with that being said, guys, let's jump straight into it. So let's start off with discussing what exactly happened this week. In the early parts of the week, you guys can see that the dollar has done very, very well with a healthy bull run reaching all the way up to 100. Now, I'm sure if you guys look at some of the older videos, you'll notice that we've actually referenced and forecasted the dollar to reach 99. And I'll put a link to that video in the description section of this video. But with that being said, guys, we see that the dollar has built a lot of momentum in the early parts of this week. In fact, for the majority of this week, that is with the exception of what we saw happening on Friday. But that's something that we're going to come to in just a minute. But for the most part, the reason for the dollar building such momentum was because Fed Chair Jerome Powell indicated that the Fed had no intention of lowering rates. This is also as we saw that there was a new deal that was put on the table by the US to Europe, where tariffs were now being set at 15%. So, as we mentioned, the dollar had a very healthy bull run, as we can see over here. However, not long after the dollar peaked, testing our daily 100 period moving average over here, we saw that there was this significant dip over here. This, in fact, was NFP. Now, NFP came out lower than expected with only 73,000 jobs added, and this was less than the forecasted amount. Now, prior to NFP being released, we actually had a lot of positive data releases coming out of the US, linked to inflation, linked to jobs. Everything was looking good. However, up until that time, when NFP was released, it actually shocked the market quite a bit and actually increased the probability of the Fed now looking to possibly consider cutting rates. This can be seen if we jump over to our SME tool over here that come September of this year, there is a now 80% probability that we are going to see a rate cut happening. And this obviously made traders, investors, all market participants rethink or anticipate that the Fed might be cutting rates sooner. As a result, the dollar had this aggressive sell off, and this is in conjunction with other news that President Trump also added a 35% tariff on Canada, a 25% tax on India, and a 39% tax on Switzerland, which is effective as of the 7th of August. So, also, we had the surprise firing of the Bureau of Labor Statistics head, which also started raising questions about the reliability of future US economic reporting. Now, looking at the market from a technical perspective, it's not surprising to see why we had that drop in the dollar index, considering the fact that we actually reached a pivotal uh, dynamic point of resistance supported by the 100 period moving average over here. And when we scale higher to our quarterly timeframes, one of the things that I want to also kind of highlight is the fact that the market has closed outside of the bands over here. But one of the other things that I'd like to kind of draw your attention to is the price at which the market reversed from. And we're going to see this a bit clearer as we scale over into the lower time frames. And I'd like to get a clearer context of this by going over to the monthly. Notice that not long after the price has broken 100.30, after we've seen that break, we saw that the price came back to retest that as a resistance. Now, previously, it was acting as a very strong support, keeping the dollar above 100. And if we scale over, we can see that this was a very significant price. in the past as well. And so now when we go over into our lower time frames, one of the things that becomes very apparent is that after the market has tested 130, it also came in line with other higher time frame points of dynamic resistance, i.e., the weekly 20 period moving average, and also, like we've mentioned, the daily 100 period moving average. And so there was a lot of resistance around this area that resulted in the dollar giving us strong signals that it's preparing itself to drop. Just to make further reference, that if we go over into our hourly time frames, there is a clear point of bearish MACD divergence that we see occurring over here with this high and this low and this high and this high over here. We see that there was clear bearish MACD divergence that occurred just before NFP release, and now we saw that there was this massive dip. So what does this mean for the dollar moving forward? Essentially, we're obviously looking for the dollar to continue its run to the downside. However, one of the things that we now need to be very aware of is that there are other levels that the market needs to break in order to confirm and to prove that the market is now ready for its descent, i.e., we need to see the market break areas like our 4-hour 50 period moving average over here, and also our 100 period moving average on the intraday time frames. However, I do see that this is a strong possibility happening, because if we scale over into the higher time frames, we already see the market potentially hitting our 50 period moving average on the daily, which is around 98. So for the market to drop to 98, I would likely see a little bit of a pullback, and this is to kind of just entice further selling off, so a further sell off on the dollar, just to sell it at a higher price. But if we were to look at the dollar kind of pulling back, if we see a dip down to 98 and a bounce up from there, then it's likely that we're going to start looking at opportunities to get short on the dollar in and of itself. So my bias for the dollar is to the downside. Now, taking that information and running over now to the euro dollar. Now, notice that the euro dollar in and of itself is inversely correlated with the dollar. And we, instead of seeing a massive dip, we saw a very, very strong run to the upside. But there is strong technical evidence to support why this was the case. As I've mentioned before, I've made reference to the market giving us a beautiful break on a quarterly time frame, breaking 111 90, call it 112. This area of resistance over here, it break that area of consolidation with a beautiful bullish engulfing candle. And then we were looking for a pullback, and we saw that the market came back and tested the upper part of the bands, but also tested the 50 period moving average as dynamic support in this instance. And so this is from a quarterly perspective. My bias on the euro now moving forward, considering that there's an 80% probability of a rate cut on the dollar come September, is now to the upside. And so these are strong opportunities for us to see the dollar getting weaker, but also now for opposing currencies like the euro to actually get stronger. And so the logical target that I will set for myself when looking at the euro will be the following. It will be the existing high that we have over here, and breaking above that will be the 120, 119 uh, target, which is lining up with our um, quarterly dynamic resistance of the 100 period moving average. Now, if I go over into my monthly time frames, I have the levels that I see the market potentially looking to target as we build momentum to the upside. Bearing in mind, in the biggest scheme of things, this was just one bearish candle in a good couple of months of strong bullish momentum. And so when we go over into the weekly, what I'm trying to do now and what I'm plotting out for is to identify areas that the market is looking to pull back towards and use as support, use as a springboard to build momentum further to the upside. And so what I'm doing is I'm keeping my eyes out, particularly for this week, to see where are the areas that the market is likely to pull down towards, so that I have an opportunity to get long on the euro in and of itself. And so this is likely going to take place in our intraday time frames. As you can see that we already broke a consolidation period over here. There was a short-term opportunity that was missed over here that I could have taken advantage of. However, If I scale into the hourly time frames, it's likely that I'm going to look for short-term dips and then just try buying in. This is not a bad area to get involved in, considering that we already had the retrace and now possibly looking to build momentum to the upside. But I'm going to have to wait and see how does the market shape up. For now, however, my overall bias for the euro in the long term, or in the immediate, or in the intermediate to long term, is going to be bullish, targeting 117. Call it, 117 as the first area that I'm targeting, and then 119 as the second area that I'm targeting, and that's for the euro dollar. Lastly, now we're going over to gold. And one of the things that we can see now with gold is that it's now adopted its safe haven status yet again. And the reason for this is because there is uncertainty within the US economy. And with the dollar being a safe haven of its own, when that is now put into question, we now see that gold is starting to show its hand. And as you guys can see, that we've had non-farm payroll giving gold quite a bit of reason to start building further to the upside. So what are the levels that we're typically looking for? Again, we have to take a top-down approach and we have to see what the market is telling us from the higher time frames. They are a massive amount of positive momentum supporting gold. And as a result of that, when I scale over into my lower time frames, I'm not swayed by the noise and volatility that I see on the lower time frames, because my higher time frames are actually showing me that there's strong indications of gold building momentum. However, notice that for the last 4 months, gold has struggled, giving us showing us strong signs of exhaustion over here. As you guys can see, that section over here, a lot of exhaustion candles prevent a market unable to break beyond these points over here. So it's likely that we could see these wicks get filled as we scale over into the lower time frames. And so these are the areas that I'm going to be focusing on. I want to know what is gold's intention when it comes to these particular areas, namely, if I can just round it off to, let's say, 3450, if we can round it off over there. What is gold's intention? When we see gold get over to 3450, how is it likely to respond? Now, I would actually pull it down maybe to 3440, and I'll explain in a moment why that's the case. Maybe 3440, 35. Uh, and we'll see. And I'll give you guys context as to why I'm doing this in just a moment. Okay, I think 34.35 is the price to beat. And the reason I'm looking at 34.35 is, notice that when we see the market testing this particular price, it had the most amount of rejections. We had it here, 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 and most recently over here. And this is on the weekly time frame. And we've just come all the way to test a weekly 20 period moving average, closing a beautiful low test candle, indicating that there is a possibility that we could build momentum to at least see 34.35 get tested. Now, when I scale over into my daily time frames, one of the things that I'm looking for is opportunities to get long. Notice that I'm not looking to trade the up and down motion of the market. I'm looking for opportunity to trade the overall trend of the market. And so, because we had such a strong, definitive close on Friday, one of the things that I'm looking for is going to be for a pullback. I need to see a convincing pullback that's going to give me enough reason, that's going to give me enough conviction to see the market use that level as a springboard to reach 34.35 as a support. And it's likely that we're going to see price test the upper part of my bands, and that's something that I'm waiting for. But that is a dynamic movement, it moves with the price. And so I'm waiting to see if that's going to be the case. For the most part, my bias for these instruments are bearish on the dollar, bullish on the euro, and bullish on gold in and of itself. So, guys, if you'd like me to review any instruments on your side, or if you just like to share your thoughts, please feel free to do so in the comment section below. But for the most part, I hope that you have a brilliant week ahead, and I look forward to chatting to you all soon. Up until then, keep well, and bye for now.